Good morning. This is Larry Edelson from my Uncommon Wisdom video market update for Monday, April 30th, the end of April. That means I'm looking closely at several signals I have in the market, especially gold and silver, to see if they can execute some buy signals or some sell signals. But to be honest with you right now, it looks like the precious metals markets, and indeed many other markets, are going to continue moving sideways for a bit longer into approximately the May 7th to May 10th period, where I have some short-term cycles that could trigger some trend accelerations or trend changes. Having said that, let's look at the charts. Right now, there's not a lot going on. The markets have indeed been going very much sideways. Here is the gold chart. You can see this choppy sideways action in a very tight trading range. We did get back down to the 1628 level earlier last week and popped back up to 1656. We're basically in a trading range defined right now by 1612 on the low side and 1700 on the high side. More specifically, that range is narrowing a bit to about 1670. Gold is betwixt and between. All my indicators continue to suggest more downside. However, time is starting to compress here as we go into the next turning point, which should come no later than the middle of May. So I am now watching the gold and precious metals and indeed the commodity markets like a hawk, because this next turning point could be explosive. It could be explosive to the upside, and we may be soon past the worst in the commodity sector. However, I don't want you to jump on that and misinterpret it and run out and start buying precious metals or any other commodities. We need to get confirming signals, and it is still quite possible that we'll see one more sharp decline before this interlude period in the commodity markets comes to an end. Let's now take a look at silver. Silver looks just like gold, pretty much a lot of sideways action with a downward bias. It looks like we're stuck in a pretty tight range here. Silver is weaker than gold. Silver could still fall apart quite sharply down to the $26 level and lower. On the other hand, we might get a little bit of an interim rally here back up to about the $34 level in silver before we get that downdraft. Also, like gold, silver's time going sideways is coming to an end soon. The cycles in silver are not as clear as they are in gold, so I would not be surprised to see some divergences occur between gold, with gold going up and silver indeed actually going down over the next few weeks, or at best sideways if gold stages a rally. However, I want to emphasize that while time for the correction is starting to run out, there is still plenty of evidence to suggest that sharp downside moves are coming before we see the next true leg up in the commodity markets, especially gold and silver. Now, the dollar index. Dollar index has been largely in a sideways trend here, between 80 and 79, drifting lower. There is some very good support down here, kind of like a short-term triple bottom. The dollar could soon rally out of here up to my target of 82 and a little bit higher. Too early to say, so that's something we want to keep our eyes on here. The dollar is, of course, as it always is, critical to many markets, and will likely become more critical in the weeks and months ahead as we see a new round of European money printing and a new round of Federal Reserve printing. Despite what the European Central Bank says and despite what the Federal Reserve says, there will be additional money printing. I have absolutely no qualms or doubts about that. Excuse me. Dow Industrials acting pretty darn strong in here, in keeping with the only market that gave me buy signals on a weekly level in February and a monthly signal in March. Triple top formation. I don't expect the Dow Industrials to explode to the upside just yet. Actually, we're in a pretty tight trading range here, 12,700 to 13,300, about a 600-point range. But as you can see, we've been chopping around in here, and we're likely to stay in that area for the next couple of weeks. Downside is still present in the Dow Industrials, but as I indicated previously, and most specifically in my April Real Wealth report, the next down leg in the Dow Industrials will likely be one of the biggest fake outs ever. And we will be looking at a new long-term bull market in blue chip stocks and cream of the crop tech stocks and S&P 500 stocks over the next several years. But again, I don't want to get ahead of myself there. We need to see some confirming action, either breaking out to the upside or that last downdraft that I expect in the Dow Industrials that holds lower support levels at around 11.5. That's it for this week's video. Please stay tuned to all my publications and communications with you. Have a good week. This is Larry.